Hi everyone, welcome back to Be Rich. We have Sashwath in the studio today. I thought we'll talk about why me and Anand and Sashwath have always been harping about conserving cash. Conserving cash, cash is king. That only if you have the cash can you deploy it at a time when an opportunity arrives. A great example is of an article and a video Sashwath had shared with me. I thought let Sashwath explain the context of it. Then maybe we can discuss a little more about it.
Yeah. So this is basically about Warren Buffett and Charlie Munger, and their model is to buy companies at fair value, but exceptional companies which will give them wonderful returns in the future. So when it comes to doing this, they have a huge stockpile of cash under their conglomerate Berkshire Hathaway. So they have about $130 billion of worth of just plain money, which they can deploy into anything which they see fit. And there's a big advantage. So Warren Buffett in the video in his annual meeting says, there's a big advantage to having $130 billion. Someone asks him, he says, you always tell us about indexing and you tell us about putting your money and making it work for you and making money when you're sleeping and all that. But then you, Mr. Warren Buffett and Charlie Munger, have kept your money laying dormant for so long. And what Warren Buffett aptly said was that, first of all, Warren Buffett is different from everyone else. The position is different. They have a lot of money. You and me, we can find amazing opportunities for small cap companies which we can purchase, and we can purchase many arbitrage. There are many arbitrage opportunities which small time investors, retail investors have, which we've talked about before. But when Warren Buffett decides to move, it's like a behemoth moving. It's like an entire country moving along with investing into something. So that's how you have to imagine it. And what Warren Buffett says is that having so much cash, stockpiling so much cash, lets Warren Buffett do things like the Japanese deal, which has been extremely lucrative for him. And in the Japanese deal, he didn't even touch a single dollar of his reserves. In fact, the stockpile has been increasing over the past years. He hasn't touched a single dollar of the stockpile to invest in those Japanese conglomerates. But having that stockpile as leverage, what he did is he said, look, I have $130 billion which I'm sitting on. If that comes a time when I need to pay it and my investments don't pay out, what I can do is I can immediately take money from this hand and give it to you. And that's why he always is able to leverage wonderful lending terms. So he has about nearly 0% interest rates, and he didn't have to pay it for the first how many ever years in the Japanese deal. And just like that, there's an article which I've written co-authored with my other uncle, which is going to be coming in the Hindu at some point, and that's about Occidental Petroleum, which Warren Buffett and Charlie Munger have recently bought as well. So what Warren Buffett says is that having cash in hand when when you're on the precipice of amazing opportunities is always a good thing to do. And even if you're not going to use this cash, the leverage which you get from having cash, because people always prefer when you have hard cash and in hand rather than an asset. People would directly give you loans and give you leverage when you need it and at very great terms. That is, you'd always be willing to lend to someone who has that amount of money and can repay it anytime you want. You'd be a bit more averse to lending to someone who has their money locked up in a property per se, which has to be liquidated and it'll take time. So cash is the most liquid asset, and that's why Warren Buffett and Charlie Munger have $130 billion of cash, which they're sitting on. And basically, they said that when they're not planning to redistribute it anytime soon, they're planning to buy back Berkshire Hathaway stock because they think that it's relatively undervalued compared to what they believe the intrinsic value is. And they don't believe in giving dividends. You'll know if you follow Berkshire Hathaway that they don't pay out dividends. So this is a war chest which Warren Buffett and Charlie Munger have crafted. So that's basically what Warren Buffett talks about.
Okay. So if you're like a retail investor, how do you make profit out of Warren Buffett company? How do you make profit out of Berkshire Hathaway? You don't. You just own it. And the value is locked in. So it depends on the level which you enter the building in. And from there, it'll slowly be inching up always. As it's inching up, your value keeps appreciating. So how do you unlock value? It's just purely by appreciation of the shares. He does not pay out dividends. There are no special warrants. There are no debentures. There's nothing that comes out of Berkshire Hathaway other than owning the share and seeing it appreciate over a long period of time. So it's like what Anand says. You buy it and you hold on to it forever. Until and unless you have a situation where you need the cash. That could be a medical emergency, or it could be for your college tuition, or it could be buying a house, buying a car. So it's the same as like buying gold and holding on to it. Of course, gold doesn't return like how the way Warren Buffett's companies return. These are two different things. You can't compare them apple and oranges. That being said, the question was asked in the interview. They said, you have so much of cash. Why don't you said the future CEO of a new CEO comes to Berkshire Hathaway? What is it? You will ask that CEO, Warren, as an investor, as a shareholder. He said, I asked the CEO, what are you doing with all that cash? So that interview person said, let me project this question at you. What are you going to do with all this cash? So that's when Warren explained. He said, yes, I have a lot of cash. He says, but the cash is critical to achieve very important things for Berkshire Hathaway. Like Sashwath said, they're a big company. He can go buy any company out. Like if he wanted to, he could have bought Twitter. If he wants, he can just walk in and buy anything. But most of the companies he's looking at are all publicly traded companies. So even if he looks at the company, forget making a movie, just says, let's look at this company. The market news will spread and the prices will inflate to a point where it doesn't make sense for Berkshire Hathaway to walk in. So what else can you do? Berkshire Hathaway, what else can they do? Well, they sit on this kind of cash and wait for opportunities like 2008. There are a lot of companies which are leveraged. And he gives examples in the video, which I don't want to dive into specific examples. You can watch the video, search for it and watch it. Where this company A, B, C, D, everybody leverages, everybody borrows. But sometimes what happens is when you least expect it, life happens. And these loans come calling for whatever reason. Market conditions, something happens in the market, some turmoil. And these big companies are very good companies. There's nothing wrong with the company, nothing wrong with the business. Everything is hunky-dory. But suddenly cash is required to close a loan, or for some reason is required. There are very few people these companies can call and say, ask for a handout of $5 billion, $10 billion. As much as you'd like to think, Uncle Sam does not keep on giving out bailouts.
Free money, yeah.
Getting a bailout from Uncle Sam is not as easy as you think. There has to be really a crux to happen for you to get a bailout from Uncle Sam. They let you go under, like we saw with Lehman Brothers, best. So the thing about this is, only a very few people have the capacity to give out a cash deal like this. And Warren Buffett is one of them. He says, as much as you believe it's not happening as often, it happens quite often, he says, where corporates call him up and they say, can we have some cash? And he says you get into lucrative positions where you can either take stock options, you can take interest, and you can take buybacks. Lots of room for you to negotiate when you sit on this kind of cash. So this is the main reason why Warren Buffett sits on cash. Now, coming to this, yes, it's all very great, hunky-dory for Warren Buffett. He's, like Shashwath said, it's a big guy with a lot of money. He can afford to do all this. How does this apply to you as a lay investor? This is exactly how it applies. When we talk about arbitrage, why don't you tell them about the IDFC arbitrage, which Anand has probably done quite a few videos on already.
Has he done?
I think he's done. But anyway, you talk about what an arbitrage is.
Okay, I'm not going to talk specifically
Don't talk about IDFC.
Yeah.
Talk about generally what
Arbitrage,
an arbitrage is.
So in arbitrage, you can picture it like this. If someone on the road is selling 20 rupees for 19 rupees, this may be for any other reason. Maybe they need that money right now, etc., etc. There are multiple reasons why an arbitrage may exist. There may be some risk associated with it. Yes, you could be caught by the police. That's one reason why there's an arbitrage present. Or it might be tough to do all the paperwork to be able to buy that 20 rupee note for 19 rupees. But regardless of all of that, there exists an arbitrage, and the arbitrage opportunity is to be able to pay something less for than what it's worth. So an arbitrage opportunity could be within the INR and US dollar. That's an arbitrage opportunity where you get some amount of money on top of what you're already expecting. So by buying US stocks, you're getting that depreciation which the INR does in terms of the US dollar on top of what you will earn in the dollar anyway. So that is an arbitrage. So there are many ways in which you can look at an arbitrage. Some very blatant and some not so blatant. But that's how it works.
Correct. So now how does this apply to sitting on a lot of cash? Well, let's talk about cash discounting. You got a friend of yours. He's got a payment to receive. Me and Shashwath spoke about this in a couple of videos back. He needs urgent cash, but he knows the money is coming from his supplier or vendor or the government. It's going to come in a month's time, but he needs it now. He needs cash to infuse into some other project right now. So he's willing to discount it. So let's say the payment which is supposed to be received is 100, but he needs only 80 rupees. He's ready to discount the 20 rupees and take the 80 rupees. Yes. He looks out. If you have cash, you can offer him that 80 rupees and wait for that 100 rupees. Now let's multiply that in lakhs. Someone requires, let's say, 5 lakhs, and they have a payment to come from the government of India, wherever, a secured source which is going to come in a month's time, maybe 6 lakhs. So you can give him the 5 lakhs and wait for the 6 lakhs. And for nothing, instead of sitting that money in the bank, you have an assured return of 6 lakhs coming.
And what he's talking about is called out of favor or distressed sales, which people do. And this is very common. This is way more common than you think it is.
Correct. This is only possible if you have cash sitting in your account. When you have cash sitting in your account, your ideas will open up. You will be able to think of ideas, ways to maximize and make that money work for you. But if you don't save that and don't have that war chest in your account, you can only dream about it.
Yes.
I can say if I was a millionaire, if I was a billionaire, I'll do like this, I'll do like that. If I was Warren Buffett, I'll do like this, I'll do like that. That anybody can do. But to become like that, you need to start small. 1 lakh, 2 lakh, whatever it is, you start small and you keep on multiplying that and keep on working on it. Lo and behold, before you know it, you'll have your first crore, and that first crore can take you to 20 crores. And they'll always say the first 1 crore is what is difficult. After you get the first 1 crore, making that 1 crore into 1,000 crores is very simple and it's very easy because the growth is logarithmic. It goes up like this. So this is what the point of this video is. This is why Warren Buffett is sitting on cash. This is why we also advise you to hold on to cash and invest it and deploy it on opportune times. Sometimes, yes, we say keep sipping. That's if you don't know what you're doing. You don't have the time to pay attention to what's happening. You're very busy. Your work keeps you very occupied. Life is keeps you fully occupied. Your children keep you occupied. Then keep sipping and forget about it. True. But if you're a person who is looking at the market, who's looking for investment opportunities, who's making money grow for them, you spend a quite adequate time of the day or the month looking at these opportunities, then first consolidate and grow a war chest. Without the war chest, none of it is possible.
And we made a video on SIP versus lump sum. This is the point which he mentioned in brief. He said that you need lump sum in order to be able to purchase markets when they're very low or when you have these sort of out of favor opportunities. This is exactly where you see lump sum come into play. And as the word denotes, surprisingly enough, the returns you get are also lump sum, where you get a huge amount of money because you waited for that right opportunity for you to be able to do that. That being said, timing the market is difficult.
Correct.
But when you do find an opportunity like this, it's like seeing a 10 rupee note on the road, and the professor who says that, it's impossible for a 10 rupee note to be on the road because someone would have picked it up, and he walks by it and the student picks it up. It's like that, where you have to be the student on the lookout for the 10 rupee note on the road. And if you do see it, pick it up and put it in your pocket and spend it on something you like.
And if you see the average return and what Anand has been saying and Warren Buffett has been saying, when you find these opportunities, like the way Indian hotels prices dropped on the day of the Mumbai attack, it dropped to 30 rupees, 25 rupees. Anand moved into a huge position there. He's been holding on it. Now it's at 300 rupees. If you see that return in a graph over the period of, 10 years, 12 years, you see the return is phenomenal. Even in doing SIP, will not give you that return. Or you take even like Sashwath said a few videos back about IndusInd Bank. When the pandemic was declared and IndusInd Bank dropped like a rock in water, it dropped.
Yeah.
If you moved into a big position at that time, now your returns are very handsome. And sipping will not get you there.
And Infosys had a moment like that where there was some turbulence in terms of the leadership. But then what you had to understand was that they had 60,000 crores at that point in their reserve, something to that effect. I don't know the exact number, but they had no debt, a lot of reserves, and they were spewing free cash flow, very little capital expenditure. It was a buy, regardless of what the management was doing.
And this is exactly how Rakesh Jhunjhunwala also made all his fortune. By buying something very cheap at the right time, then holding on to it till it was a point where he's ready to move on to the next deal. He'll liquidate it and sit down the cash and move on to the next one. Like that, you keep jumping from rock to rock. Before you know it, you'll be sitting on the moon.
Yeah.
Anyway, I hope you found this video interesting and informative as always. Please do think of subscribing to our channel and turning on the bell notification icon so you'll be notified every time we come up with a new video or a new content. Thank you again for joining us today on Be Rich.
Thank you.
I am in Tokyo on work on the 5th of August 2023. I have a lot of following in Japan, Tokyo. Those who want to meet me in Tokyo on 5th August, kindly drop me an email on the address given below or contact us on WhatsApp there. My team would get in touch with you and facilitate the meeting. Once again, I thank you for your support for Be Rich. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.